We are looking at section 8, and section 8 is taking us to continuous operation costing. Remember that in section 7, what we did was order costing. And we were able to look at job costing, batch costing, and contract costing. That was basically what section 7, exposed us to. In section 8, we are looking at something different, which is continuous operation costing. In continuous operation costing, we're going to talk about process costing and joint product costing. Now, it is important to know that cost is something, or is a concept that is key to the production of goods and services. This we have emphasized from the beginning of this course, and that is the thrust of this very course on cost accounting and management. Determination of cost and the various processes of determining that cost and maintaining them, and then using them in the determination of profit. So this section 8 is going to the learning outcome here is that we should be able to explain what continuous operation costing is all about, and then at the end of the day we should be able to enumerate the details of joint products, byproducts, joint products and byproducts. We should be able to enumerate the details of joint products and byproducts. So basically, that's the objective of section 8. So what is continuous operation costing? Continuous operation costing is another costing method. All right, you just need to understand it, that continuous operations costing is another costing method. Now, unlike specific order costing that is applicable where work is undertaken to customers' specification, continuous operation costing is applicable in industries where there are repetitive operations. You have operations that are repetitive in nature. You do them the same process, the same sequence over and over again. But in order costing, we are saying that specific order costing is applicable to job costing, batch costing, which is more relevant to customers' specification. They are directly targeting customers' specification. But in continuous operation costing, it is the other way around, because we are just looking at applications. We are looking at situations where processes or procedures are the same and they are being repeated continuously. So when you have that kind of operation, we apply continuous operation costing. Now, in manufacturing industry, continuous operation is applicable in 1, process costing, 2, output or operations costing, process costing or output costing, process costing or output costing. So these are basically the two methods, that we apply continuous operations costing. Two very methods that we use. Either we use process costing or output costing. Now let's look at process costing. Process costing is a method used in a situation where production follows a series of sequential processes. A production follows a series of sequential processes. That is when you use process cost. The method is used to ascertain the cost of product or service at each stage of the production. We are saying here that there are many stages of production. There are process, all right? There are processes, then there are process. So the various stages of production in that activity, is what we call, process. And process costing is a method that is used to determine the cost at each stage of production or at each stage of the process. So it is generally applied in industries where you have continuous mass production, where there is, mass production. That is when you will use continuous costing method, and that is also when you will use process costing method. All right. So now, like we said, process costing is used in variety of industries, including food processing, paper milling, chemical and drug manufacturing, oil refineries, soap making, textiles, and a lot more different places where you can use process costing. There are common features that apply to process costing systems, and these features must be taken into consideration so that we will be able to identify when it is needed. One, the expenditure for each cost center is collected, and at the end of the accounting period, the cost of the completed units are then transferred into a stock account or to a further process cost center. All right. What we are saying here is you aggregate all the costs, aggregate the cost for each cost center, put them together, at the end of the accounting period. This cost is now transferred to the cost account or to another process, cost center, depending on the length, of that process. Another feature is that accurate records are required of units produced and part produced units, as well as the cost incurred by the cost center. So we must make sure that accurate records are produced, are maintained, for each unit that is produced and for each stage that we are applying this method. Accurate record must be maintained. Now, the cost unit chosen should be relevant to the organization. The cost unit chosen must be very relevant to the organization. Now, the cost of the output of one process is the raw material input for the next. All right. So that's to say that whatever we achieve in one stage becomes a work in progress that is being input in another stage. So for each of these stages, the cost of the output is, taken into consideration. Wastage due to scrap, chemical reaction, evaporation, and all that are all taken into consideration. So that is what we are seeing. That's what we need to know about process costing. Remember that we are saying that this is applicable in a situation of mass production, and in that situation you have different stages of production. Before you get to the final product, there are different levels, different stages of production, and we are saying that for each stage of production, cost is being accumulated or aggregated, and this cost is being fed, or entered into the stock account or into a process, cost center, which becomes, becomes an input cost, to another stage. So that is it. So all these identifiable stages are very key in process accounting. Now, let's look at the concept of joint products and byproducts. Concepts of joint products and byproducts. The cost of producing a production unit, a production input, that, for example, a raw material, that would amount to joint product is known as joint cost. I repeat, the cost of processing a raw material that would amount to joint product is known as joint cost. The joint cost is restricted to the spin-off, to the split off point. That's the point after which each joint product will be incurring a separate processing cost. All right, so that is very clear about joint products. So let's look at the accounting system of byproduct. Byproduct is a secondary product arising as a result of a processing activity aimed at producing a certain main product. All right, we say that in a refinery, before the refined product comes out, there are also byproducts that emanate in that process. So it is, byproducts are usually secondary products that arise as a result of producing the main activity. The market value of a byproduct is usually less the processing cost after the split off point is usually negligible compared to the total market value of the joint product. So that is that. So we'll now look at methods of apportionment of joint stock. Methods of apportionment of joint stock. One is physical unit basis. The second one is costing of professional services. The third one is cost unit in service industry. We have just mentioned three methods of apportionment of joint stock. Three methods of apportioning joint stock. One is physical unit basis. Two is costing of professional services, and third one is the cost unit in service industry. Now, the physical unit basis, under this method, the joint cost is shared among the joint products on the basis of the quantities of physical units. All right, under the physical unit basis, we are saying that the joint cost is shared among the joint products on the basis of the quantities of physical units produced, provided all the products are measured by a common unit of measurement known as either kilograms or liters. So the problem with this method is that consideration is not given to price, and so it does not consider the value of the product. Usually the value of the unit is the most important factor to be considered, because that is what will help us to determine the accurate cost. So we look into the main to see some examples that have been solved there and familiarize ourselves with it. So now costing of professional services. Now, in most cases, professional offices such as those of architects, accountants, engineers, tax practitioners, and so, where services are rendered and classified as belonging to the service industry, it may be appropriate to apply service costing principles. All right. So this is because the services rendered by these professional offices usually differ from one client to the other. So we need to put all these costs together and apportion it to the joint stock. So that is also an important one. The same thing with the cost unit, in service industry. So with this, we have also exhausted session 8, and the summary of what we have done in session 8 is that we have looked at other costing. We have also looked at the basis of overhead absorption rate. We have also look at the methods of apportionment of joint stocks. We look at concepts of joint products and byproducts, and we will also look at the various areas of applying process costing. So with that, we've been able to deal with continuous operation costing, and basically what we treated here is process costing and joint product costing. Remember that process costing, we say, is applicable in situations of mass production and in situations where there are different stages of production, identifiable different production stages, and each stage cost is accumulated. This cost of stage 1 becomes an input cost to stage 2, and and all that. So that is essentially what we did. So with that, we come to the end of session 8. Thanks for listening.